The aftermath of Helene and the looming East Coast port strike are both likely to disrupt the supply chain for major retailers. My next guest says the storm could actually benefit one category in the short term, the home improvement stores like Lowe's and Home Depot, of course. Let's bring in Laura Champine. She's director of research at Loop Capital. Laura, first of all, what do you know from sort of just the data that you collect as to how affected your coverage area currently is?
Yeah, thanks for having me, Kelly. Obviously, the storm is awful and hit some places in the Carolinas, for example, that just aren't used to this kind of damage or this kind of an impact from a storm. So it's going to be a while for the cleanup, and it does seem like the damages might be even more than Ian. In terms of actual stores' ability to get back up and running and serving customers, we are not hearing about stores that are damaged kind of beyond recognition. Most of the companies we cover are getting their stores back up and running. Lowe's, which is based in North Carolina, has the most exposure. And because they have stocking distribution centers, they're usually pretty good at meeting the near term, sort of the immediate term demands of their customers in these markets.
And Lowe's, if I'm not mistaken, was trading at, I don't know if it's a 52-week high or probably close to an all-time high at this point. What accounts for that? And we spoke the other day with Anthony Chukumba at Loop, and no, that would be your firm. Anyway, one of the analysts who we were checking in with said once you start to get a consumer cycle kind of restarting, which is what it feels a little bit like right now, some of the early beneficiaries are home improvement stores, and then it kind of moves on to general retailers and so forth. So I don't know why you're seeing such a positive moment for these companies in terms of their share price.
Right. So luckily, Anthony is a colleague here at Loop, and we both cover retail together. And he's obviously, I think he's right that you see a quick reaction in these consumer discretionary stocks. And the bigger picture benefit, especially for companies like Home Depot and Lowe's, is a loosening rate cycle, which should benefit next year. Not this year. It's kind of a little late for this year. But next year, we do see a recovery. And that's why you've seen Lowe's and Home Depot bounce. They'd been really underperforming the markets. Now they're just about in line for the year, with Lowe's doing a little bit better. And that bounce has come directly from the interest rate cuts.
With the port strike looming, look, it's the East Coast ports, not the West Coast ones. Right. According to our reporting, Walmart, Home Depot, IKEA, Samsung, LG, automakers, auto suppliers, I think through Baltimore, are the companies that could have products most affected. Is that what you're tracking as well?
It is, and I think some consumables, which might touch what we cover in Costco, for example, you probably will see some pressure on costs overall. Also, I don't put it past the container companies to raise prices no matter where the disruptions are. So we had containers coming from China inflating earlier this year on the Red Sea crisis, which doesn't make intuitive sense, but wherever there is backup, it does tend to impact the global supply chain, particularly on the cost side. So it's something to be aware of. It's our take at Loop that this crisis will be resolved pretty quickly, given that Biden's got some power to clean it up, as these are essential parts of our economy, and that's likely to happen in front of an election, in our view.
Yeah, LG Electronics, Samsung, they do a lot up through the Newark ports. I mean, should shoppers expect to see any price hikes or shortages as a result of this, or does it depend on how long it goes on?
You know, the good news for us is we've got a buy rating on Whirlpool, which is our homegrown domestic appliance company, which is larger than LG and Samsung in major appliances and produces a lot of components here on this continent. So you just might see a market share shift. What happens in terms of pricing? So demand, as I mentioned, still very weak back half of this year for big ticket. I think that most of the manufacturers have learned that if they promote more, they're not selling more. So I would expect pricing to stay fairly high going through the end of this year. We need remodelings to get a boost, which happens probably back half of next year, to drive the whole industry.
In a weird way, that could make a strike now good timing. It almost might give those on strike more leverage if there's not just going to be a major reaction from consumers or retailers, really. But we'll see. Laura, thanks for your time this afternoon. Really appreciate it.